Oh, not morning. I almost said good morning. Good afternoon, guys.
Hi.
Hi. Where are you guys today?
Currently, I'm in Rising Sun. Sounds like my thing might be echoing. I'm in Rising Sun getting ready to have a meeting at the coffee shop at 2:30. Rise and Grind by 3:30.
What are you going to get?
I don't know because I don't really drink caffeine at this time. So,
are you off caffeine right now?
What?
Are you off caffeine right now?
No, I've just haven't been sleeping well, so I've been trying to cut my caffeine like by noon, and it's only half caff at noon now.
Okay,
I'm always making adjustments.
Yeah,
let's see. Maybe decaf with heavy cream. I don't know. Do they have decaf there?
Yeah.
Okay, maybe that.
So good. Awesome.
Where are you?
I'm still in Florida. If we had filmed last week, I would have been in Maryland, but we did not. So I do go places.
No, you don't.
Not enough, probably. Kylie?
Over at my house in my little home office.
Love it. Well, Carly, are you drinking anything right now?
I am. I made myself a whole half pot of coffee earlier, so I'm finishing that off with some of the Chobani pumpkin creamer and a little pumpkin spice on top.
So you do drink hot coffee, like every now and then?
I do, and it's only from about September to like April. Like it has to be like somewhat chilly for me to like crave a hot coffee.
Yeah, that makes sense.
Are you having coffee or do you just sip of water?
I'm a sip of water. I didn't even show this off. I was given a Stanley this week by Janelle, and it's great. I've been drinking way more water lately, which is good.
Oh, good. It's 40 ounces.
What?
It's 40 ounces, right?
Yeah. I was told like, oh, if you ever get a venti at Starbucks, it fits in the Stanley cup, so you should try it. So when I got a venti last week, I dumped it in and it only came up to like here.
Oh, no.
I was like, I feel a little gypped. This feels like smaller than a venti now.
The venti is the biggest one there?
Yeah. Well, there is a bigger one. A Trenta. But I don't know how many ounces.
One of those. I feel like it's too extreme.
Yeah.
To order one of those.
It's like
what is it called?
Trenta.
Wow. I don't think that's on the menu.
No, you have to ask. Yeah, pup cups and Trentas you have to ask for.
Oh, okay. Good little tidbit there.
Yes.
I never know how to order Starbucks size-wise. I'm like, just give me your medium.
Yeah.
I went there yesterday and had a complete freeze because I always order through the app, but I had cash on here and I was like, I'll just order. And I went up and he asked what size, and I could not remember the sizing at all. I was like, the middle one?
Oh, by the way, I learned this when you were on vacation one day, Grace. I did not know this, but I was really surprised. So when I've been ordering my coffee with just heavy cream, they put 2 pumps of classic syrup in their iced coffee.
Oh.
Even when you don't when you think you're getting black. So that came as a surprise. I was like, what? I didn't cause a big scene, but I was so surprised at the register.
Yeah.
So no wonder their black coffee tasted so good.
I know. I'm like, I was wondering why this is the black coffee that I want.
Yeah. That's like if you go to Tropical Smoothie, if you don't ask for them not to, they'll dump a 4th cup of just straight sugar into your smoothie. I only learned that. I worked there many years ago, and now I'm like, oh wow, that's why I get a headache after these.
So our topic today, what is our topic today?
We're going to talk about ways to invest in real estate, which is one of our favorite topics.
Yeah, I love that. So I have a lot of things written on my page here. How do we want to get started? Why don't we let's throw something out. I want to try to talk about all the ways to invest in real estate. But what do you guys think?
Yeah. I would start with just the first simple one, like buying your own home.
Yeah.
Instead of renting or anything else.
So that's a good first step for sure.
First step,
because that can put you on the trajectory to invest in more real estate in the future more quickly. Mm-hmm. And why is that?
Equity. So
yes. Oh my gosh. No,
yeah. As the value of your home increases and as you're paying down your mortgage, if you got a mortgage, you're growing your equity in the middle there. And that's something that you can, in a couple of different ways, you could take that money out and use toward your next either primary home or investment property. So it's pretty neat. Just keeps growing.
And it's an asset that you'll always have after buying a house.
Mm-hmm. Yeah, and it's the quickest way to build wealth. Typically, the average amount of appreciation on real estate over a long period of time, like 3 decades. Does anyone want to take a stab at what the average annual appreciation is?
Average over 3 decades? Is that what you said?
Annually.
Annually? Okay, so the 3 decades is separate. Okay, annually. Oh no.
I don't want to lowball it.
5?
Is it 7%?
Yeah, it's close. It's a little lower than that. So it's probably like between 3 and 5%, depending on which stat you look at. So it sounds low, but when we're talking about real estate, like the biggest asset you have, it's growing quicker than you would think. So on a $300,000 house, if you just grew your asset year over year at 3%, you're adding $9,000 in equity every year. So most families do not save that fast. Some do if they have a 401k and they're diligent about saving in there, but most families do not. That'd be $9,000 a year, right? But we've seen years recently where we have broken the double digits too. So you'll have lower years where you're gaining 3%, but then you'll have higher years where you're gaining 8%. So it really adds up over time. And right now, home prices just hit the highest ever this week. So the average home price is the highest it's ever been as of right now.
Crazy.
And why is that?
Well, I'm sure there are a lot of factors, but for one, we have really low inventory right now. So there's a lot of demand, which I would think is probably driving up home prices.
Yep. And the reason for that is mostly because builders never caught up from when they stopped building during the meltdown. So they never caught back up to the amount of homes we actually need. And on top of that, our biggest generation that was ever birthed are reaching their first-time home buyer age. So there are a lot of buyers in the market that need homes. It's called household formation. So people in their 30s, mid-30s are just starting to form their own households, and they need houses. And there are not enough because not enough houses were built over the past decade and a half or so. So that's why real estate is continuing to be a super strong investment as far as maintaining its value and increasing in value very quickly. So primary residence is a good first step. So I can just give you, Carly and I can both give you kind of like an idea of our recent purchases. So we bought our house in March of 2019 for $299,900. Our balance now is $268,000. And the value of our house is easily $400,000, probably more, but I'm being conservative. Mm-hmm. So in a little over 4 years, we've gained $132,000 in equity in this time period. Wow. So that's a pretty good investment, I would say. Now, also, I invested in a house at the beach as a second home, and that house, I did get a good deal because it was distressed, but I now have like 100. Currently, I have probably like $125,000 equity, not even after 1 year. So it really depends. You want to be strategic about where you buy. You want to be strategic about what you buy. And then Carly, what do you think, if you're comfortable sharing? I don't know if you are.
Oh, yeah. So we bought our house in 2020 for 285, and then the last time I checked, our home value was like 421 estimated. So in just 3 years, I mean, we have over $100,000 in equity. Yeah. And thankfully for us, we live in a like desirable area of Delaware. A lot of people are moving south, and we're in Kent County. So we didn't do that strategically, but I'm just glad that's how it ended up.
Yeah. And a lot of people want to be in Delaware because of the low property taxes. So we're seeing like so many people want to move to Delaware from like New York and New Jersey. So Delaware just tends to be a really strong state to invest in real estate in.
I would say like our neighborhood, we live in a very large neighborhood of almost 300 houses, and recently we're seeing a lot of Pennsylvania tags and New York tags, like when they're first moving in. It's not Delaware tags, it's not Maryland tags. It's a lot of people coming south.
Yeah. Do you have any insight into the market where you are, Grace? In what county are you in Florida?
I'm in Collier County. Okay. And it is a really it's really up and coming. Like during COVID, a lot of people moved down here. Originally, it was more of like a retirement area. But now there's a lot more like families, business people just moving down here I think a lot of people came out of like California, New York, down this way. And so home prices like really shot up over the last few years down here. Like it's a little depressing if you look at how much a home cost, like 4 years ago even, and you're like, oh wow, that looks like chump change now almost, by comparison. And so we I've mentioned other times, like we're buying a house it's under construction, and we got in on this specific price on the house because a family pulled out in the middle of construction. So they were honoring the original price of the home. But the other homes that they had started building in that development afterwards, the exact same model, were going for like $20,000 more already. And so that was encouraging to us to know like the house we're buying already has $20,000 of equity, probably. And so that was exciting. It felt like this is going to be kind of like a probably steeper mortgage payment than we were originally hoping for, just because of the area. But to know that like that's going to be worth it, pretty soon was encouraging.
Yeah. So they say the best time to buy real estate was probably 10 years ago, and the second best time to buy real estate is now, because we don't expect prices to come down. So everywhere I go, people are like, is the housing market going to crash? And we just covered why it's not, because there's too much demand and not enough houses. And they're not expected to catch up on filling that demand anytime soon. So overall, real estate is just a really great investment. So we have primary homes, and then you could invest in a second home and use it as a vacation home and build equity in that. You could also have a vacation home that you use sometimes and maybe Airbnb it other times. And then there's like the standard rental, but like the buy and hold, where you're just buying homes for the investment of them, and then you're holding them for long-term rentals. And then Airbnbs are considered short-term rentals. And then there is like the fix and flip type of investment that people are very interested in. So that's very like HGTV, right? Probably doesn't go quite like the TV show, but we've seen it go well locally, and people do like to do that, depending on your resources. Like if you have a contracting team, or your husband is a contractor and you're an agent, or something like, or your family member's an agent and gets a good insight into properties, and someone very close to you as a contractor, that would be, really good. And then some real estate teams actually focus on investors, so they have a team set up for you, and we know a couple of those as well. So we are definitely very resourceful when it comes to investing in real estate. And then there is light commercial, where I just got a call yesterday where a local salon owner wants to buy it's a residential / commercial property on a major highway. She currently rents her salon, the property her salon is in, but she wants to buy, so she owns the real estate. And that's what McDonald's does, by the way. They own all their real estate, so they're actually in the real estate business, not in the fast food business so much. A lot of their assets are in real estate holdings.
Wow.
Yeah. And then there's 1 to 4 unit properties. So if you wanted to get started right away and buy your first property, live in 1 unit, and then have the other up to 3 units cover your total mortgage. We've had a lot of people do that over the years that I've been in business. And then there's the 5 to 8 unit properties, which are more like you're buying an apartment building, or you're buying a piece of commercial on the bottom, residential up top. And we have specialized programs for that and resources to connect you with if that's something that you're interested in. I attend a real estate investors group regularly, and I learn a lot from all of those folks as well. And then you could always help your children. Like my parents helped me. They knew how good an investment real estate was, so they helped me get into my first home, and my brother. And then we've just been able to move up. It helped us with our move up home buying over the years. Yeah. So I hopefully will be lucky enough to help my children do the same. And I know a lot of families do. So how do you pay? Like what's needed? Let's talk about what's needed. How do you come up with the money? What kind of credit do you need?
Yeah.
Compared to a primary home, what would you have to say about that?
Compared to a primary home? Like, yep. Are you investment to primary? Or what did you mean? Sorry.
So compared to how hard it is, or what kind of credit score you need with a primary, what is the difference with an investment property, do you think?
Well, currently investment properties require about 20% down if you're just buying it straight out as an investment property. So that would be a big difference, because with primary home, you could potentially, in the right circumstances, only put down 3%,
or less.
So, or less. So that's a big difference there. There'd be a lot more savings you'd have to have, or assets in general. And although, now feel free to correct me, because if I'm saying anything wrong about this, but with FHA, you could potentially get a 1 to 4 unit property, rent out, the other 3 units, live in 1, and you're only putting down 3.5% because that's FHA's minimum requirement.
That is a great point. And that is a great way for first-time home buyers to become investors immediately. And that program is amazing for that, as long as you're committing to live in 1 of the units. Mm-hmm. And I've done a ton of those over the course of my career, and it's just it's amazing to see like young people do that.
Yeah.
And then you can also get the seller to contribute to your closing costs too on that product.
Yeah.
And we had one in the past 12 months, or maybe the past 24 months, where the guy bought a 4 unit and he lived in 1, and he only did 3.5% down because of his FHA, and then the seller paid all of his closing costs, and he got that amazing piece of real estate for just 3.5% down. So maybe like $15,000.
Yeah.
So it was pretty cool. I love it when that happens. How about credit? Credit. So, does credit have to be different than if you're buying a primary?
So the exact number is stumping me. Like, if there's like a ballpark of like, the thing is, like, investment properties are way riskier to a lender, so they are going to be stricter on the credit score. And so for like typical primary, we ideally want the score for like a conventional loan to be 680 or higher. If we were using a different loan program, we could go lower than 680. But for investment,
let's talk about what we want to make sure we know what they can get. So we would do loans down to 580 typically.
Yeah.
If you have a ton of down payment money, then we could maybe go to 500, but it's case by case.
Right.
If everything else looks good, then possibly. I don't want to leave that out. Sorry.
No, sorry. I'm glad. Please interject. Yes. So when it comes to investment properties, what would you say is like the ideal score as a baseline?
You need pretty good credit to be an investor. There might be programs out there for less than 700, but typically, unless you're doing, and I got to write this down because I don't want to forget to talk about it, but unless you're doing something called hard money, I would say 700 plus would be a really good benchmark. The stronger, the better. It's already a risky product to the lender, so we're already going to get adjustments as far as what the cost is to get any rate on our rate sheets. So 700 plus 740 would be better. 800 would be even better. And then, so, you want to get all your ducks in a row if investing long-term is something that you want to do. And if you feel that you might have some credit, if you want to get into it, but you have some credit concerns, we can always talk to you and get you connected. We can help you ourselves, or we have resources to help you get your credit back in check. And then, there's also a family opportunity loan. So you can help your children or your parents with a very low down payment. It's called the family opportunity loan. And then, so how do people get money? I think that one of the big barriers to buying homes in general is the money that it takes to acquire a property. So I have a list here. Let's just sort of call them out.
Yeah. So you can accept gifts from family or other people in your circles. It doesn't have to be family. That's one thing. So a lot of times, like, family members will give gifts to, like you said, cover the closing costs, or just a little bit toward closing costs. Your own savings would be another one. Or checking.
What about liquidating, like retirement, like pulling out of it? Would that be considered?
Yep.
Since you're pulling out.
So you could tap into a 401k. And the good thing about 401ks, which a lot of people are surprised by, is that many times when you're using the proceeds to buy a home, you can take a loan against yourself, and they do not tax or penalize you to withdraw early. So a lot of people think like, oh my gosh, I cannot touch that retirement account because I'm going to get penalized and then taxed. Oftentimes not the case with a 401k, but you'd have to ask your 401k administrator or ask us to help you kind of put those pieces of the puzzle in place. So that's a good one. What else? Have a couple more on here.
Yeah. I'm not sure if it's on your list, but like you could get contributions from the seller toward your closing costs too.
Yep.
In some cases.
Okay. And then if you already have a primary, or if you have multiple properties, you could tap into the equity in one or more of the properties. So you could tap into, for instance, I could tap into some of that $125,000 I have in both properties to get cash to buy more properties. So a lot of investors do that. That's like with a home equity line of credit. So you can use it, and then depending on what your plans are with the house, you can start to pay that off. The goal is to get ahead, right? Not to get in. You want to have way more assets than you have debt, if possible, at some point. But it can take a while to get there. But you can leverage these things to acquire more real estate. And you could tap into multiple properties. I have a client right now that has a portfolio of investment properties that he has equity in all of them, and he wants to withdraw, get a credit line across those properties to get a loan so he can fix up his most recent property that he bought. So there's just so much that we can do. And then lastly, there's hard money, which is they don't look as strictly. So they look at compensating factors and they don't use like an automated underwriting system. So they're looking at the whole picture and really the real estate as an investment and the risk just based on the equity typically. So the more equity that's going to be in the property, like they might allow you to acquire a distressed property and finance the cost to fix it up and have, if the numbers work out, you might not need money. So there's private investors for that we know. And there's private money like that for commercial acquisitions too that I am connected with. So that's called hard money or private money. We have a borrower that we were working with recently, self-employed, and it didn't end up working out, but he has a private lender that he's connected with that he's acquired other properties with. So he just decided to go with it's supposed to be a quicker and easier way. So if you're getting stopped up on like self-employed paperwork, sometimes that's just a way to quickly acquire a property without all the verification and validation of income, assets, and all of those things.
Right.
So I think we covered most of it. Do you think there's anything else that I haven't mentioned?
I feel like we covered the broad strokes of it.
Yeah.
Yeah.
So I think everything comes down to like, it's so individualized and so circumstantial. So as you can maybe see, I love talking about it. So anyone that ever wants to talk about investing in real estate, I'm down for just the conversation. So if you need help or you want to put the steps or the proper pieces of the puzzle in place in the right order, definitely reach out. And I think that's all for that part of our show, but we have a really other exciting. Well, what are we giving away today?
We're giving away your choice of a HomeGoods or Home Depot gift card. So everyone's got like one of those, I think. What do you guys prefer? I'm assuming you're HomeGoods gals.
Oh yeah.
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 So if you would like, you know what? I've got a little instruction thing for this. Okay. If you would like to enter this week's drawing for the HomeGoods or Home Depot gift card, just like this video, share this video, and comment your next home project, whether that's decorating or you're doing some reno or something you'd like to do. And then we have a giveaway active right now for our beautiful fall basket. So I've got a nice wheel for that.
Do we have this is putting on the spot. Do you have a picture of a basket?
Well, I could probably find it really quickly. Just give me 2 seconds. Oh, okay. How fast was that? I have it.
That was so fast.
I was gonna start singing. I was gonna start humming Jeopardy music.
Oh, you can. You can still hum Jeopardy. Okay, let's see. All right. Do you see this? Yeah.
It's loading for me. Oh yeah. I have it all set to deliver. If somebody is local that wins this, I can run back home before I head to the beach and make a drop off today.
Yes.
Let's
amazing.
see who wins.
Yes. So now we're going to hop over to our wheel. Okay. Now you can hum the Jeopardy music.
Is it do 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 do? Is that the right one?
Yes, that's it, I think. Do you see it now?
No.
No, it's loading.
That's good because I think we cut out for a second. You see the wheel?
No.
No? I see the wheel. That's so weird.
We have like a loading screen.
Oh, okay.
Oh my gosh, do I have to start rapping?
Maybe. You see it now?
Yeah.
Okay. So we've got some names on here. Let's do this.
I'm so excited. Please be someone
There's
local.
a lot of good deals for this basket today.
Anywhere from Cecil County to Delaware Beach area.
Victoria! Woo-hoo.
Victoria Perez, way to go.
Yes.
She is local, so I'm going to have to find her.
Perfect.
She'll be happy about that.
Yeah. No one would be unhappy about that. Wow. Yay.
So I think is that all we got? next.
think
We don't
that's-
know what our topic is next week, but we will have one.
Yeah. Hey, if you guys have ideas, people watching this, let us know. We want to hear what you want to hear about.
We could maybe talk about how to become a loan officer.
I would love that. Yes, let's talk about that. So, if people have questions about becoming a loan officer, they should tell us, and we'll make sure to answer them.
So that's what we do. We are mortgage loan originators, and that's what our whole business is about. So if you have any interest in that, you're going to want to catch that video. And if you have questions, private message us or put them somewhere.
Yeah. Yes, yes.
Okay.
All right.
Well, thank you.
Yeah, enjoy your
See you next
coffee.
time.
Bye.
See what I order. Bye.